by ratifying the Kyoto Protocol, the EU committed to reducing its emission by 8%. And despite significant reduction in the UK or Germany or some other countries, back in 2000, many European countries had enormous difficulties in curbing their emissions. The EU then decided to set a cap on emissions from its main industrial sites and to implement an emission market with the aim of reducing CO2 emissions. Once the protocols came into force and was ratified, so once Kyoto was ratified into force, the EU credits issued via the CDM and GI flexibility mechanism were recognized by the EU, providing a link between the EU ETS and the Kyoto Protocol. The EU ETS is today the first international emission trading system and currently covers more than 10,000 installations in the energy and industrial sectors. These installations are collectively responsible for nearly half of EU CO2 emissions and more than 40% of EU greenhouse gas emissions. In the next slide, I summarize the option company which takes part during the EU ETS phase. So basically, if you are a company A, let's say you are a power station based in Brussels, and you receive 100 tons of CO2, that's your allowances. And then you realize that your real emissions are 110 tons of CO2. You have three options. Either you reduce your emissions, and for instance, you invest in energy efficiency measures, or you produce less electricity, so you don't have to buy extra allowances. The second option is to go to another company which is also part of the EU ETS and which has maybe another situation. For instance, the allowances was maybe 100 tons, but they had more energy efficient installation and they only emitted 90 tons of CO2. So you can go to company B and buy the credit. But the third option is that you can also develop a CDM project and for instance, investing in a renewable energy project in Brazil or India, and then obtaining the CERs and using them for compliance reasons within the EU ETS. If we look at the evolution of the EUA prices, so EUA, there are the EU allowances, the allowances that every company which participates in the EU ETS receives. If you look, the line in gray shows you the price during the first trading period. If the first trading period put in place the necessary infrastructure, the environmental benefits were, however, rather limited, as we can see from this figure. This phase ended up with a price of almost zero, and this is explained by the fact that there was a huge over-allocation from member states. So when the release of official verified data in 2005 emission highlighted this over-allocation, the market responded as one might expect, and supply is much greater than demand. The price crashed. So basically what we can learn from this first case is that in addition to the need for reliable and verified emission data, we also need to avoid any distortion of competition between member states. And that's one thing that the Commission will take care as of like in the next phase, where the national allocation plan will be removed and the Commission itself will allocate the allowances to every company. Some other changes will also be some other changes. For instance, there will be arrangement to other countries. Norway, Iceland, or Liechtenstein will join the ETS. The aviation sector will join very soon, so as of 2012. Some other gases will also join the scheme, which only covers CO2 now. The smaller installation, which only represent a very few percentage of the emission, which are quite numerous, and for them it's quite difficult to manage the cost and the burden of being part of such a well-developed scheme. This installation will be excluded and will get other measures to reduce their CO2. And I think probably the most promising measure will be that you will try to implement a new project mechanism where companies could implement sort of domestic CDM. So it will be possible for companies in Europe to create a project-based mechanism to obtain credits that they can then sell back to make their investment profitable. And of course, the new version of the UTS will be compliant with any future international agreement.